Yes, welcome back to Encryptos. So in this video I'll be showing you how to identify points of interest. So points of interest is usually the area where we are looking to enter the market, so we have to know how to identify it. So there are three conditions to identify a valid point of interest. So the first one is there has to be a valid break of structure created. Also, we have to see a fair value gap or imbalance created in the zone. Then the zone must be unmitigated. So we're going to look at each one of these. So the first one is valid break of structure or BOS. So once you have your market structure identified, you can see your higher high and your higher low. Then you now see the continuation move. That shows you that we have a break of structure right here. So the break of structure must be valid in the sense that the price must close above this higher high, so that makes it a valid break of structure. We also have this kind of break of structure when you have an impulsive move, then you have a valid pullback. Each of those valid pullback, once price break above them, that is also a break of structure. So the price must close above the previous high. Okay, so that's break of structure. Then we go to fair value gap. So a fair value gap is simple. Usually candles, when candles are formed, they always overlap. You see candle, if three candles follow each other, you see they overlap each other. Candle 1 and candle 3 will also overlap. You see something like this. So you see that once candle 1 forms, candle 2 will form and touch candle 1, and candle 3 will form and touch candle 1 also, either with a wick or with the whole body. So that is usually how the market forms, for it to be balanced. So but when we have a situation where it is not balanced, meaning candle 3 is not touching or overlapping on candle 1, that is an imbalance. So you will usually see a gap somewhere between candle 1 and candle 3. So you see something like this gap. So whenever you see a gap like this, that is a fair value gap. Okay, so you can see the gap right there. Candle 1 and candle 3 are not touching each other, so that's what we call fair value gap, FVG for short. Okay, so we're going to see another example. Okay, so that's fair value gap. So let's look at the uptrend situation. So you can see candle 1, candle 2 and candle 3. You will see this gap between candle 1 and candle 3. You can see the high of candle 1 and the low of candle 3. So that gap between them is what we call imbalance. It is what we call fair value gap. Okay, so if it is like this, maybe we have the wick of candle 3 touching the head of candle 1, there's no gap here. Okay, so but if we have something like this, there's gap between candle 1 and 3. So we always look at 3 candles, and if there's a gap between the first and the third candle, that is a fair value gap. So it's easy to identify on the chart. Okay, so that's fair value gap. So the next thing is unmitigated zone. So it's simply when we have a zone that causes break of structure and has a fair value gap, but the zone has not been revisited by price. So we're going to see an example. So this is a market structure, and right here we have breakup structure. Okay, so if this breakup structure is valid, that is one of the conditions for our POI. So let's say we have breakup structure, it is valid, and then let's say there's fair value gap right here. Let's say we have a fair value gap right here. So what this basically means is that from this point, the higher low point, to the top of the fair value gap is a POI zone. So this is a POI zone because it is a zone that caused price to cause this breakup structure. So it is from here buyers came in and pushed price higher to cause breakup structure. So this is buyers zone. Buyers came in from here. So the two conditions we've used so far to confirm this POI is breakup structure and fair value gap. So the third condition that will make it valid is if this zone is unmitigated. And what do we mean by unmitigated? So as you can see the trend right now, price is up here. So let's say when we saw this chart, price has already retouched this zone. This is now mitigated. So if we extend this, we can no longer use this zone as a valid POI because price has mitigated it. So but before price mitigated it, we can use it. So let's say this has now happened. This is a fresh zone, unmitigated. So this is what we mean by unmitigated. When price has not touched the zone, it is unmitigated. But if price has already touched the zone, maybe even once, it is now mitigated and we cannot use it. It is no longer a valid POI. So we're going to see all of this in the real market so that we know how to identify it, a valid POI on the chart. So the position of the POI is usually where you have your higher low for uptrend or lower high for downtrend. Another position of the POI could be the first valid zone after inducement. So in this case now, this is our inducement. So this is inducement. So the first valid zone after inducement can also be considered as a POI. So this zone right here, it is not the extreme. This is the extreme. The higher low is the extreme. But this zone right here, after the inducement, can also be considered if there's fair value gap, and as you can see, it caused a breakup structure right here. So if there's fair value gap and there's a breakup structure, it is also a POI. So I'm going to put the two conditions. So let's say that is a fair value gap. Okay, so if we have a fair value gap and we have breakup structure, so this zone is also a POI that we can look to take price from. So it's always the first valid zone and the extreme valid zone. Okay, so any other thing in between is not considered. So because if price is coming from up here and price breaks through this place, maybe price breaks through the first one, we are not going to take trade on the next one, which is this point, even if it's valid, because we don't know if the trend has changed. So we are going to wait for price to come to the extreme. That's only when we will know if the trend has changed, because if trend has changed, it will break higher low. So we are looking at the first and the extreme to take trades from. So that is very important to note. So the first POI and the extreme POI, that's what we are considering. Okay, so let's look at the chart and see exactly what we're talking about. So this is a chart. So this is great. So we have a downtrend right here. So we're just going to start from here for explanation purpose. Okay, so we're going to mark the trend of this chart using the 1, 2, 3, 4, 5, 6, 7, 8 numbering system. So we know that the first thing we are marking, number 1, is the impulsive move. So we have the down impulse that goes like this. We have a valid pullback here, then this. Now this is correction. Okay, so meaning we had the first impulse, and this is inducement, that's number 2. So impulse is number 1, inducement is number 2, correction is number 3. And after we see correction, the number 4 is lower low. So this is a downtrend, so number 4 is lower low. So then we add this continuation move. So that's continuation move. So this continuation move now has created a break of structure, a valid break of structure right here. Right? So that's a valid break of structure. So the continuation move is number 5, the break of structure is number 6, and number 7 is up here where we label the lower high. So can you see that? So once we follow this number, it's easy to remember what's next. So you can see the continuation move continued up onto this place before we add a correction. So the continuation move ended here because now we have a correction right here. So this is a correction, the highest point, then the impulsive move started again. So we had this continuation again. Okay, so this has created another break of structure. So we had another break of structure right here, meaning here is lower low and up here is lower high. Okay, then we add another correction right here, then another impulsive move started again. So this is 1 minute time frame, that's why the candle look so small, but whatever the time frame you're using, it is the same thing. Okay, So we have another break of structure to the downside. Okay, so this is another break of structure happening right here. And then this is our lower low again, and lower high right here. Okay, so as you can see, the trend continued. Okay, the impulsive move continued up until this point. There's a valid pullback right here. Okay, so and you can see that another correction has happened. So but we don't know where this correction is going to end before another break of structure to the downside. Okay, so pending that happens, we are going to identify the first valid POI and the extreme valid POI. Okay, so this is the last impulsive move right here, from this lower high to the bottom right here. So that's the last impulsive move. So on this last impulsive move, that's where we're going to find our POI. So we'll start with the extreme. So we'll go to the lower high region and check, we can already see that we have a break of structure. So that's the first condition, a valid break of structure, because price has closed below the previous lower low. So that's the first condition. The second condition is to see if we have fair value gap. So as you can see, we have so many fair value gaps. So I'm just going to show you some of them. So you can see, okay, I can remove, okay, as you can see, we have a gap here, there's gap here, there's gap below, there's gap, all of these places, these are gaps. You can see between the three candles, you see the candles do not overlap. There's another small gap right here. So this is just an example. You don't have to identify all the gaps. I'm just showing you that these are gaps. Okay, so and the most important gap of all of this gap, this is also gap. This is a very good chart to use as an example. So this is another gap. So many gaps right here. So the most important gap you need is the extreme one. So coming from the extreme, check if there's a gap right there. So this is the extreme where the lower high is. That's where you see the extreme fair value gap. So check, you can see there's a gap right here. Okay, there's also a gap here. Okay, so this is a gap you need, the extreme gap. So once you see that extreme gap, all you have to do is just mark from the top of the lower high to where the gap is. So that zone is your POI. So for this case, they are sellers, so we're going to call it seller zone. Okay, so we're going to extend this zone to see if the zone has been mitigated. So looking at this, price has not returned back to this point, so that is still a fresh zone. Okay, a fresh zone, so it's all mitigated. So this is a valid POI zone. So I call it seller zone because this is downtrend. But another thing you can call it is valid POI. Okay, so that's a valid POI. So that's the extreme, and it's the most effective compared to the first valid zone. So how do we know the first valid zone? So the first valid zone, immediately the inducement has been taken out. So you can see this is our inducement right here. This is inducement right here. Now you can see the first zone that caused break of structure. See, this is a fair value gap, but it has no break of structure, so I'll just remove this. But this fair value gap, you can see there was a break of structure right here because there was a valid pullback there. So this is a break of structure. So we have break of structure, this which is one of the conditions. We have fair value gap, which is also one of the conditions. So that is a POI. So from the top of that move to where the fair value gap is, so that is a POI. And as you can see, price came there and returned back down. So you can see how effective the first valid zone is also. So this is also a valid POI that we could be looking to take an entry. So that has already given us level 1 to 2. So though this is not how we place the trade, but I'm just showing you that you can enter a trade from there, the first valid POI, and the extreme. So now this zone has been mitigated, so we cannot use this zone again. As you can see, price already touched here, so we cannot place another trade here again. So if price should come back here, we will not be taking this trade. If price come back here, we will not be taking this trade because it has already been mitigated right here. So we have to wait for it to come up here if it will. It's not every time it does. So if it comes there, we'll be looking to take our trade. So that is how to identify a valid POI. So if you have questions, feel free to ask in the group. See you in the next video.